The lightest metal on Earth, lithium, is the backbone of the 21st century tech boom. It is the next oil, the next gasoline, and much, much more. Lithium's rise to superiority as a commodity stems from the world's green energy revolution. While lithium plays a huge role in storing renewable energy, it's also highly sought after in the auto industry and the tech sector, with megacorporations rushing to secure supply. After global lithium demand grew by 10% between 2000 and 2010, growth took off in the last few years, and demand is now growing at an astonishing pace. And this is just the beginning. According to Bloomberg New Energy Finance, demand for lithium is expected to rise 38-fold by 2030, a truly unprecedented surge. The rise of lithium will come hand in hand with the surge of renewables, ushering in the next generation of energy. Here are 5 stocks that could feature prominently in the lithium revolution. Rio Tinto has its hands in every major metal source, from aluminum to iron ore and copper. Rio Tinto is now getting serious about lithium, too, and within a few years, thanks to its traditional chain of acquisitions and organic growth possibilities, the London-based multinational could find itself at the forefront of the lithium market. The strategy's main tenets are extending Rio Tinto's lithium portfolio by buying into the world's leading lithium producer, the Chilean Sociedad Química y Minera de Chile (SQM), and developing the Jadar deposit in Serbia. It is an open secret that the 32% of SQM, which the Canadian Potash Corp is obliged to sell as per the conditions of its merger with Agrium, will inevitably go to Rio Tinto. Rio Tinto wants it, and the Chilean government does not want the stake to be sold to China. Therefore, it is only a question of time before the long-awaited acquisition will take place. It would be reasonable to expect that buy-ins will not cease at that. Yet Rio Tinto is eyeing to ramp up its own production. It owns the Serbian Jadar lithium borate deposit, estimated to contain more than 136 million tons of mineral resources. At a 1.8% grade, this results in a recoverable volume of roughly 2.5 million tons of lithium. When first lithium will be extracted from Jadar, Rio Tinto will catapult itself into the position of Europe's leading lithium supplier. 2018 will be a very busy year in the lithium business, and Rio Tinto will be one of the crucial elements in raising the stakes all across the board. Buzz has been about brine, with the Atacama, Chile, and Uyuni, Bolivia, deposits being far and away the largest in the world, and for that reason, other promising extraction methods have often been overlooked. Power Metals Corp., a relatively unknown $57 million market cap Canadian company, is helping to spearhead the hard rock lithium mining drive. By setting its sight on pegmatite, a holocrystalline igneous rock loaded with lithium spodumene, it is tapping into a long-overlooked opportunity. Why are pegmatites tomorrow's talk of the town, you ask? Well, they are made of more lithium-dominant compositions and are much more evenly spread geographically. Power Metals Corp. has 3 properties, most notably its Paragon Case Lake deposit in Ontario, Canada. As an analyst's general rule of thumb, average pegmatite deposits must contain an average of 1% lithium in order to be economic. PWM's Case Lake property recently returned samples well above that in % lithium, and a recent company news release can be accessed here. This is no coincidence. The exploration efforts of Power Metals Corp. are led by Dr. Julie Selway, Ph.D., one of the world's leading geologists of lithium pegmatites. Whilst working for the Ontario Geological Survey, she has more knowledge of the region than any other geologist in this field. Ontario is an ideal place for PWM surge, with excellent infrastructure and proximity to demand hubs. It offers a flat 10% tax rate on profits above the first $10 million in annual sales and no taxes payable for 3 years. Chile's tax intake is 3 times as high. This eliminates any drawback caused by the higher extraction costs. PWM is budgeted and funded for a phenomenal 15,000 meters of drilling this year. This is by far the largest drill program being undertaken amongst all lithium hard rock companies. As soon as the snow melts in Ontario, expect a flurry of news coming your way. And it seems that carmakers are poised to go electric as soon as possible. One of the top contenders is General Motors, planning to put 23 all-electric models on the market by 2023. Production-wise, the goal is to produce 1 million EVs by 2026, with a major focus on sales in China, which has set strict quotas for EV production. Cognizant that such a growth would require a lot of lithium, GM aims to cut the average cost of a lithium-ion battery to less than $100 per kilowatt-hour from the current level of $145 per kilowatt-hour. By doing so, GM's new battery design cuts down on cobalt usage and replaces it with nickel, leading to higher storage and energy production capacity. Concurrently, it wants to increase its EV battery range from the current 230 to 240 miles to more than 300 miles, 500 kilometers. Thanks to its proprietary battery technology, General Motors will be able to convert any car category, be it a SUV, crossover or van, into a fledged EV. The ambitious goals of GM's electric vehicle drive other competitors have been wary of going electric and concentrate for the moment on hybrid motors, puts it in a great position for very robust growth within a 2-3 years time frame. Clay deposits might not be as productive as brine or pegmatites, but as no one produces lithium from them currently, Lithium America's push might become a technological breakthrough. Having completed the exploration program and finalized process testing, the Lithium Nevada project is now progressing steadily, making use of its great connection to infrastructure and location, just a couple hundred kilometers from California's tech clusters. Lithium Americas is aiming to extract lithium with the speed of the hard rock process while remaining more affordable than traditional brine extraction. However, the company keeps a diversified portfolio that includes the third largest lithium brine deposit in the world, Caucharí-Olaroz. Being the largest shovel-ready lithium brine development project in the world, LAC is readying to extract the 8.7 million tons of 666 mg per liter grade lithium. Caucharí-Olaroz does not have the impurity level that the Bolivian Salar de Uyuni has, and by virtue of being located in Argentina Jujuy province, it is not subject to the crippling Chilean royalty tax rate. Apart from the Caucharí-Olaroz project, LAC holds 3 other projects in the Puna Plateau, extending from Chile to Argentina, where reportedly 80% of the world's brine resources are located. Lithium Americas Corp. stock has rallied 87% in the past year. Smart investors expect an even more robust performance this year. Bearing testament to Lithium Americas' anticipated rise is the company's listing on the New York Stock Exchange this January. But not just the regular ones, used across the board in consumer electronics. AES is developing long-duration lithium-ion battery system that can provide energy for hours to satisfy any grid's needs. By claiming that AES can do a 2-hour product at less than $1,000 per kilowatt, which by far beats sodium-sulfur batteries. This is particularly pertinent with regard to renewable energy technologies. By involving high-density lithium-ion batteries in a smart grid, renewable energy fluctuation, which occurs in wind, solar, tidal energy alike, can be minimized. Last year, AES and utility provider SDG. For smaller or isolated grids, this is fantastic news as they finally get an energy option that is both cheap and completely adjustable to fit specific needs. AES took a further step ahead by teaming up with German technology giant Siemens to create a joint venture, Fluence, which would combine the two companies' unique know-how in energy storage systems. All this, combined with demand growth from the automotive industry, IT and other sectors, will lead to a massive demand increase for lithium. Wise investors have already noticed AES's success. After a prolonged period of stagnation, its shares are on the brink of rising, substantiating the management's target of annual earnings growth of 8 to 10% through 2020. Honorable mentions: BlackBerry Limited, NYSE, BB. This well-known cell phone pioneer is engaged in the sale of smartphones and enterprise software and services. The company's products and services include enterprise solutions and services, devices, BlackBerry technology solutions and messaging. BlackBerry used to be a worldwide leader in phones, but Apple, Google and other Android manufacturers have rapidly acquired market share. BlackBerry has since focused on software and is now developing systems for autonomous vehicles. Tech giants such as Apple and Google won't be able to repeat BlackBerry's success in this sector that easily. By Joao **** important. By reading our content you explicitly agree to the following. Please read carefully **** forward-looking statements. This news release contains forward-looking information which is subject to a variety of risks and uncertainties and other factors that could cause actual events or results to differ from those projected in the forward-looking statements. Forward-looking statements in this release include that prices for lithium will retain value in future as currently expected, that PWM can fulfill all its obligations to maintain its property, that PWM's property can achieve drilling and mining success for lithium, that the Lithium lithium extraction process being developed will be cost-effective and can work much more quickly than other extraction technologies, that the process can be commercialized for large-scale production, that PWM can use the newly developed process, if successful, to reduce its costs of production, that high grades found in samples are indicative of a high-grade deposit, that high-grade lithium is in sufficient quantities at surface to keep drilling costs down, that batteries and EVs will continue to use large amounts of lithium, and that PWM will be able to carry out its business plans. These forward-looking statements are subject to a variety of risks and uncertainties and other factors that could cause actual events or results to differ materially from those projected in the forward-looking information. Risks that could change or prevent these statements from coming to fruition include that the company may not be able to finance its intended drilling program, aspects or all of the properties, and the new process development may not be successful, mining of the lithium may not be cost-effective, PWM may not raise sufficient funds to carry out its plans, changing costs for mining and processing, increased capital costs, the timing and content of upcoming work programs, geological interpretations and technological results based on current data that may change with more detailed information or testing, potential process methods and mineral recoveries, assumptions based on limited test work with further test work may not be viable, competitors may offer cheaper lithium, more production of lithium could reduce its price, alternatives could be found for lithium in battery technology, the availability of labor, equipment and markets for the products produced, and, despite the current expected viability of its projects, that the minerals cannot be economically mined on its properties, or that the required permits to build and operate the envisaged mines cannot be obtained. The forward-looking information contained herein is given as of the date hereof, and the company assumes no responsibility to update or revise such information to reflect new events or circumstances, except as required by law. Disclaimers. Paid advertisement. This communication is a paid advertisement and is not a recommendation to buy or sell securities. Oilprice.com, Advanced Media Solutions Limited, and their owners, managers, employees, and assigns collectively, the company, has been paid by the profiled company or a third party to disseminate this communication. In this case, the company has been paid by PWM $75,000 for this article and certain banner ads. This compensation is a major conflict with our ability to be unbiased. More specifically, this communication is for entertainment purposes only. Never invest purely based on our communication. We have been compensated by PWM to conduct investor awareness advertising and marketing for TSXV, PWM, V, OTC, PWRMF. Therefore, this communication should be viewed as a commercial advertisement only. We have not investigated the background of the company. The third party, profiled company, or their affiliates may liquidate shares of the profiled company at or near the time you receive this communication, which has the potential to hurt share prices. Frequently, companies profiled in our alerts experience a large increase in volume and share price during the course of investor awareness marketing, which often ends as soon as the investor awareness marketing ceases. We do not guarantee the timeliness, accuracy, or completeness of the information on our site or in our newsletters. The information in our communications and on our website is believed to be accurate and correct, but has not been independently verified and is not guaranteed to be correct. The information is collected from public sources, such as the profiled company's website and press releases, but is not researched or verified in any way whatsoever to ensure the publicly available information is correct. Share ownership. The owner of oilprice.com owns shares of this featured company and therefore has an additional incentive to see the featured company's stock perform well. The owner of oilprice.com will not notify the market when it decides to buy more or sell shares of this issuer in the market. The owner of oilprice.com will be buying and selling shares of this issuer for its own profit. This is why we stress that you conduct extensive due diligence as well as seek the advice of your financial advisor or a registered broker-dealer before investing in any securities. Non-investment advisor. The company is not registered or licensed by any governing body in any jurisdiction to give investing advice or provide investment recommendation. Always do your own research and consult with a licensed investment professional before making an investment. This communication should not be used as a basis for making any investment. Indemnification, release of liability. By reading this communication, you agree to the terms of this disclaimer, including, but not limited to, releasing the company, its affiliates, assigns and successors from any and all liability, damages, and injury from the information contained in this communication. You further warrant that you are solely responsible for any financial outcome that may come from your investment decisions. Risk of investing. Investing is inherently risky. While a potential for rewards exists, by investing, you are putting yourself at risk. You must be aware of the risks and be willing to accept them in order to invest in any type of security. Don't trade with money you can't afford to lose. This is neither a solicitation nor an offer to buy, sell securities. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this website. The past performance of any trading system or methodology is not necessarily indicative of future results. Terms of use. By reading this communication, you agree that you have reviewed and why agree to the terms of use found here. http://oilprice.com/terms-and-conditions. If you do not agree to the terms of use, http://oilprice.com/terms-and-conditions. Please contact oilprice.com to discontinue receiving future communications.